Hello everyone, today I will be reacting to this video. I hope you enjoy and thanks for watching.
Here's why when you buy a new build, your mortgage will always go up the second year you own the property. So when you buy a new build, the property taxes that is included in your escrow account is based off of the land assessed value of the property. That land assessed value before you built your home is going to be less when there's no structure on the property. As soon as you build a house on the property, that land assessed value will increase, therefore increasing your property taxes the next year and also increasing your escrow balance, which means you pay more. So be careful with this if you're thinking you're always going to pay the same thing on any type of mortgage, because property taxes can always fluctuate.
So this message is for all my homeowners out there. How y'all feeling? Yeah, y'all got that email yet saying y'all property tax done increased this year? Yeah, that insurance rate just going up higher and higher, ain't it? Yeah. Yeah, we just got an email this morning saying our mortgage payments done went up substantially. Yeah, so at this point, Uncle Sam, I'm gonna need to see you outside because we gonna have to squabble. I'm gonna need that fade. Everybody talking about, oh, you need to buy a house. Yeah, until that mortgage rate go up. Till that escrow payment just skyrockets. Oh, man, and don't let nothing need to be fixed in the house. Yeah. You remember back in the day, you used to call maintenance, hey, maintenance, can you please send someone to 304? My AC unit is out. Yeah, let your AC unit go out now. You scared to call someone. You steady opening windows because you already know that bill going to be higher than Smokey in the pigeon coop. Boy, I tell you. Let me know if it's just me who want to put hands on Uncle Sam. Let me know. I'm just checking on y'all. I'm praying for us.
I have just about had it up to here with being a first-time homeowner, let alone a homeowner in general, because what the fuck is going on? I moved into this house last summer. It was a new build, new construction, so I didn't have any property taxes, right? And so I just got my first assessment, property tax assessment. Starting September 1st, my mortgage is going to be doubling, nearly doubling. I'm going to be paying just under $5,000 a month for a 3-bedroom home, 1,500 square feet, up top. The basement, it's finished, but we don't go into the basement. For fucking what? Property taxes? Why did I buy a house?
The mortgage system is modern slavery. Think about it. You go out, you buy a house, an overpriced structure of wood, and you take on huge debt for it. A couple of things happen because of that. Number one, you get tied down to the country. You get tied down to the place. You cannot leave your house, at least for a few years, if not decades. So they ensure that you will be staying here for a few years and pay your taxes. And secondly, they get an excellent worker. When you're in debt, you always show up on time. You never question authority. You never question your boss. You do your best work because you don't want to be fired. You don't want to be laid off. You need to keep your stable job because you have to pay the mortgage. So, in exchange for an overpriced structure of wood, they get taxes and the perfect cog in the machine. They get a tax-paying slave. So it's a win-win for them.
Property taxes suck. Yes, we all know this. But if you bought a brand new home, then chances are that you only got charged for unimproved taxes on the land. And be ready because that bill is coming. Because everyone and their mama is buying a brand new home, I thought I would share this. Unimproved taxes versus improved taxes are two very different things. Here's what happens. When the county goes out to assess the land, there's no house on it. So therefore, there's nothing to bill on. Therefore, it's called unimproved taxes because the house is called an improvement. So come January 1st, they drive by that same lot. Now there's a house on it, which means now it's an improved property, and they're going to bill you on the assessed value of the land with the house. When you buy a house, it should be explained to you because normally they can't charge you for something that hasn't been billed yet. However, you want to set aside money for the improvement taxes because it's coming. On average, the payments can go up between $300 to $400 to $500. If your mortgage is set up with an escrow account, put the money aside. At the end of the year, you have it to go ahead and pay the shortage. Hope this helps.
Okay, so here's something they will not tell you when you buy a house, or at least they didn't tell me, and now I'm salty. So when I first bought my house, my mortgage payment was $1,151. After my first year living in that house, they raised my mortgage to $1,579. The fuck? I thought I was tripping. That is a $428 increase. I was under the impression that my mortgage payment would literally never change, but I was wrong. So here's what happened, and I'm going to use example numbers. So let's say there's a house and the value of that house is $20,000. Because the value of the house is so low, that means that the property taxes are also going to be significantly low. So let's just say the property taxes are only $500 per year. Okay, now let's say an investor comes in and rehabs the entire house, puts everything brand new into the house, boom. Now it's a beautiful home. And now the value of that house is $150,000. Okay, now because the value of the house went up, that means that the property taxes are also going to go up. So now the property taxes are $2,000 per year instead of $500. And this is what they did not tell me. The fuck? So basically, I believe it's every single year they come and do an assessment of your house. And they say, what's the value of this house from last year to this year? And if your property has increased in value, they are going to increase your taxes. Now, I am highly upset with the people who my mortgage lender and my realtor for not explaining this to me. And the reason why I'm so upset is because I would have been okay with that if they would have explained that to me and I was ready and prepared. But no, I just got a bill in the mail and it said a $428 increase due in 2 months. I believe the issue is a lot of the times, especially when it comes to young people and first-time home buyers, realtors and mortgage lender, whoever you're dealing with, they don't want to give you all the information up front because they just want to make the sale. They just want to make money. And I believe that is so unethical because now I don't even want to work with you. Like, just tell me so I know and I'm prepared.
Did your mortgage payment just go up hundreds of dollars overnight? Do you want to know why? Well, if you bought your home in the last 2 years, it's most likely your property taxes. Either you bought your home from a seller that's been living in the home for a very long time, or you bought your house brand new from a builder. Let's focus on the first one and I'll explain the second one tomorrow. So here in Texas, if you own the home that you live in, the taxable value of your property cannot increase more than 10% per year. But when the property changes hands, the county can raise the taxable value to whatever level they see fit, but only one time. And this usually doesn't happen until the start of the calendar year after you bought your home. So if you bought a home for $400,000 in June, but the taxable value at the time was only $300,000, the first year you would pay the taxes at the $300,000 value, but the second year, your taxable value could increase $100,000, driving your taxes up around $2,400 a year, depending on where you live. That's a $200 a month increase. And if you don't get that bill to the end of next year, not only are your taxes going up, but your escrow account is also short $2,400. And in order to catch this up, not only do you have to raise the mortgage payment $200 a month to make sure that you aren't short for next year, but you also have to raise it an additional $200 to catch up from being short. Unless you have $2,400 just lying around to pay it all now. And if not, poof, your mortgage payment just went up $400, just like that. Good times, right? And if you bought your home from a builder and your taxes shot up, well, I guess you're gonna have to tune in tomorrow.
Thank you for watching. Please like, comment, and subscribe, and I will see you on the next one.